Almost every Canadian choosing between fixed and variable mortgages is making the same mistake, and it can cost you tens of thousands because this decision, it's not about picking the right rate, it's about picking the wrong strategy. Let's go. Most people think that choosing between fixed and variable is about predicting where interest rates are going to go, and it's not. And the moment you try to guess where the rates are going, you've already lost, because this decision here has nothing to do with the market, and it has everything to do with you, your psychology, your risk tolerance, and how you're going to handle uncertainty. There are three types of borrowers, and once you can understand which one you are, this decision becomes very simple. Let's start with the mistake almost everyone makes: trying to time the market. People go fixed when rates are rising, they go variable when rates are low, and they think that they're being smart. But what they're really doing is just reacting emotionally to current events, not strategically. Look at what happened in 2021. Rates were low, variable looked so good. So people who normally would have chosen fixed 9 out of 10 times, they switched to variable. Then rates spiked. Payments went up, stress went up, not because variable was wrong, but because it didn't match their comfort level. Now on the flip side, some people locked into fixed at the right time, and today they feel like geniuses, but they didn't predict the market. They just chose what felt safe to them at the time, and it happened to work out. That's not strategy, that's luck. So here's how you actually make this decision. There are three types of borrowers. Type 1, you hate uncertainty. You want to know exactly what your payment is every single month. No surprises, no stress. If that's you, you're a fixed rate borrower, and you shouldn't fight that. Embrace it. Because even if variable saves you money on paper, you won't stick with it when things get uncomfortable. Type 2, you're comfortable with movement. You understand rates, they go up and they go down, and you don't panic when things shift. If that's you, you're a variable rate borrower, and over time, that usually works in your favor. Type 3, you're kind of in the middle, and this is where most people get stuck, because you're trying to optimize instead of decide. And that's where mistakes are going to happen. Now, there's one situation where strategy actually shifts, and this is where most people miss this opportunity. When fixed rates are cheaper than variable, this happens during something called a yield curve inversion. We just came through one. It sounds complicated, but here's what it means for you. Normally, variable rates are lower than fixed, but sometimes short-term rates rise above long-term rates, and fixed becomes cheaper. When that happens, even variable type borrowers should pay attention, because now you can lock in certainty at a lower cost, and that's so rare. And that's where strategy matters. Let me make this very simple. If variable is 5.5% and you can get a 2 or 3 year fixed at 4.9, that's not normal, that's an opportunity. So instead of committing long term, you take the short term fixed. You lock in that lower rate and you get some stability, and then you're gonna reassess later. That's not timing the market, that's responding to structure. A quick reality check here. If you're still trying to pick the option that makes more money on paper, you're asking the wrong question. Because the real risk here, it's not the rate, it's your behavior when things change. Let's talk about what actually matters to you. Fixed rates give you certainty, you know your payment, you know your rate, and you can plan your life around it comfortably. Variable rate, it gives you some flexibility, lower penalties, and an immediate exposure to rate changes, which means when rates drop, you benefit right away. But when rates rise, you feel it right away too. Now here's something that most people don't realize. A fixed mortgage, it's not really fixed forever. It just resets every few years, usually every 3 to 5 in Canada. So if rates rise, you're gonna feel it eventually, just not immediately, which means fixed is really just a delayed exposure. It's not permanent protection. And that's an important shift in thinking. Let's bring this into a real scenario for you. A couple buys a home. They choose a variable rate product because it's cheaper right now, at first. Everything feels great, but then rates slowly creep up, they rise, payments go up, stress builds. Now they're second guessing everything. Not because variable was wrong, but because it didn't match who they truly were. Now flip it. They choose fixed. They pay a bit more up front, but they sleep better. No stress, no surprises, That's the real trade-off. Not right versus wrong here, but it's comfort versus potential savings. Here's the shift in all of this. The smart homeowners, they don't try to predict rates. They choose a strategy that they can stick with, because the best mortgage today is the one you can live with tomorrow, not the one that looks best on paper. If you're asking which one is better, you're asking the wrong question. The question you need to ask, I encourage you to ask this: which one will I stick with when things get really uncomfortable? Because that's what actually determines your outcome. So before you choose fixed or variable, ask yourself this: how will I handle uncertainty? What level of payment change can I tolerate? And will this still feel right if rates move against me in the wrong direction? If you can answer that honestly, the decision becomes so simple. If you want help running your numbers and identifying who you are and mapping out both options properly, there's a link below where I can build out a strategy based on your situation, your comfort level, not just the market. Most people don't lose money because they picked the wrong rate. They lose money because they picked a strategy that they couldn't live with and stick with. You don't have a rate problem here with your mortgage. You have a strategy problem. Book a strategy call below with me, and when you're done with this one, go watch my last video where I break down the best bank in Canada to get a mortgage with. I'll see you there.